banks now. Nigeria's big banks received a combined 16.2 trillion naira from customers through deposits across various account types in the first quarter of 2020. This as business activities almost came to a halt as a result of the coronavirus pandemic. The total deposits collected by Tier 1 lenders in the review quarter was 12.7% above the 14.3 trillion naira recorded in the comparable quarter of 2019. Now, before the lockdown, though, businesses were adopting a wait-and-see attitude. Hence, it is suggested that companies left their cash in the banks untouched and were possibly hoarding. Analysis of the bank's Q1 financials showed that the big five commercial lenders recorded a combined uptick of 1.8 trillion naira year-on-year in the review period. We're now joined by Arise Business Analyst Chika Mbonu to talk more about this. Chika, you're welcome. Thanks for joining us. So is this correct, this view that there was cash hoarding on businesses because of the lockdown? Help us out with this jump in deposits.
Not necessarily. I think just like we've been, this came out from the analysis of the banks, top 5 banks Q1 2020 results.
Yes. Comparing
their total deposits in end of March this year with the total deposit end of March in 2019.
Yes.
And they saw that growth. A lot of things have, just like we analyzed the bank results, we said the results of the banks reflect the policies of the Central Bank of Nigeria and the macroeconomic environment that we are working with. Do recall that the Central Bank during the course of the year, 2019, told companies, individuals and companies that they cannot invest in treasury bills again.
Yes.
And so what happened was that each treasury bill maturities that they are occurring were now, baskets falling into the deposits in the banks.
Okay.
So if you look at the treasury bills of banks, for example, a bank like GT, at the time last year, the treasury bill holding was about 300 million. Compared to this period, it's about 300 billion. Compared to this time, it's about 100 billion. So you see that washed out into the. Let me explain it further.
Yes.
This time, by this March last year, the treasury bill rates were holding at 15%.
Correct.
At least for 90 days.
Very juicy. Yeah. Yes.
But the comparable rate now is about 2%. Just like this, about to. So you'll find that if they mature, you cannot even go and invest.
Right.
This time around, because the rates are not very attractive.
Correct.
So what happened was that even the term deposits in the banks now, the rates were also very low. Now, the window now that came out for a lot of companies was the 7 deposit.
Okay.
Because the seventh account is pegged to the monetary policy rate.
Right.
The CBN said they should not be lower than 30% of MPR, which came to about 4.05%. So that became the attractive rate for a lot of customers.
Okay.
So a lot of customers are taking the maturing treasury bills and pushing them into the deposits. So you find that if you do a graph of the treasury bills of holding of customers, you find that it has fallen, whereas the deposit banks has grown. So that's actually the major reasons.
Thank you.
So what happened now? It became a holding pattern, as they say in aviation. That it was the deposit became a holding pattern, looking for investable outlets for them, and that's why you will find the commercial paper programs of most corporations, like the flour mills, Nigerian breweries, and the bond issuance by Dangote. Dangote came in, it became very attractive. Dangote bond came in, I think, to above 12%, and it was more than 150% oversubscribed. That will tell you that they are holding there, waiting for investable outlets. Do you recall? So there's a report out there that the foreign portfolio investors who have their maturities and they don't have foreign exchange to take out their money are also on a holding pattern. And where's the holding pattern? In bank deposits. So that's basically what's happening. It reflects the exigencies of the time and what's happening in the banking industry, especially in response to CBN policies and the macroeconomic environment that we're facing.
That's a very in-depth explanation. Thank you for that. So what's the benefit for banks? Is it with this increase in deposits now, are we looking at perhaps better net interest margins, for example, for them? How do you see
you see what's happened is CBN looks at the deposits of the banks and sees massive deposits. These banks have liquidity. And what do you look at? This liquidity, what are they going to do with it? They're going to chase foreign exchange with it. And so like last time, the bidding was supposed to take place on a Friday. On a Thursday, they deputed all the banks. The wholesale auction was going to take place, and the retail auction. They deputed the banks with massive, that's one that was reported, massive, I think 1.4 trillion, and so in that way, limited the ability to go to the market to go and bid for foreign exchange. And then for them, after the market that day, I think by close of work on Friday, CBN refunded some of those money that debited. Yes. So you find that as the money is there are no loanable, credible obligors outside the transaction to do. Remember, value chain is down. Nothing's happening in China. The world economy is slowed down. You can't open LCs, even if you want to open LCs. Your confirmation lines may be frozen. So you just carry liquidity. And then your cash reserve ratio is going to be very high. CBS is taking it and putting non-earning assets. So that's why we say that it's going to be a soft quarter for the banks.
Okay, so would the preference be for those in the real sector? Would the preference be for all that liquidity to be pushed into lending? Yes.
Yeah, lending. But you see, we're looking at lending. You're looking at also if you're lending to you to bring products from abroad, who's going to buy from you?
Right.
The economy, there's a slow down in the economy. So who's going to buy from you? So that's actually the issue. So it's a waiting game now because we don't know how bad this is going to play out. Look at the Nigerian macroeconomy. We are predicting a contraction of about 3.4% by the end of the year for this year for our country.
Correct.
Where it's already forecast that we're already inside recession or going to enter recession. I know the things come with recession. High level of unemployment, decreased output, purchasing power, and high inflation. I know those things are going to affect us. So it's not easy of going to push out money and give to companies to go and borrow and to buy what?
Right.
We analyzed the breweries here.
Yes, we did.
You saw that most of the turnovers are falling. If the turnovers are not falling, they are not able to pass on their costs to consumers because of reduced purchasing power, and their profits are reducing. So all in all, you find that things are not very, very, very good for the environment.
Okay, so thank you for that. Now, there was also a report out talking about investors or shareholders to expect less dividends this year. Any thoughts on that? Does that sound reasonable?
That's macro prudence. The model has been done for the banks for the rest of the year. And one of the things that came out clearly is that there's going to have increased loan provisions. Yes. They reduce profitability. And when that happens, it's going to affect capital. And so when capital is hot, what happens? Well, you're going to ask shareholders to bring in new money to move the capital. Yes. So which one is better for you? So wise banks will therefore, when the profit they make, they will decide not to div it out much and return some to cover for any eventualities that might arise from the environmental issue of first night, especially COVID, that will hurt their capital. So it's going to be that. Apart from that, also the profitability this time around is going to reduce. That's what's going to happen. It's going to reduce. The quantum profitability is going to reduce. In addition to that, they need to be for the capital. Right. So it's better for them to retain the profits they have instead of divvying it out.
Well, what do you think if they were to approach shareholders to say to bring more funds in, what do you think the attitude of shareholders would be in this climate? Do you think they'll be more cautious as to how?
You just need to look at the share prices and look at the activities in the market. I know that it's been difficult even for Nigeria for a long time, for a lot of companies in Nigeria now, to actually go out for IPOs. Right. A lot of them have done some rights issues, and they tried, but the environment is still very weak. The market is still very weak for that, and I can't predict the success.
Okay, so with regards to as far as the outlook is concerned, now if we look at what's this lockdown period, we definitely do not want to return to another. We want to keep this lockdown eased. As far as if we look at the business environment now, because of the impact, yes? How do you see things? We can't go back to another lockdown. That's essentially what I'm asking with regards to business.
The medical science can always tell us what to do. Medical science is what's going to tell you. If another lockdown is necessary due to medical science, we have no choice. You have to do it. And that's basically what it is. And you've heard the NCDC, the DG hint on that. If that's what's required to get down or flatten our own curve, right. Maybe that's what we'll have to do. Despite we already know the impact on the economic environment.
Exactly. It doesn't seem like there's really any way out.
Unless you start doing like one of the two countries we know who are saying that we don't mind killing people dying in order for the economy to stay open.
So at this point, it's just it seems like from your perspective, or if you ask any other analysts or economists out there, it's a wait-and-see approach at this point. It doesn't seem that there's any...
Just for you and me, who are Nigerians, we just continue to pray for the oil price to tick up. That's our salvation now, immediate salvation now.
Right.
You know, yesterday you were proud that it's crossed over $30. What is it today?
It's gone back
down again.
It's gone down to 30
Come down under 30 again.
Right.
So for us, that's fundamental, that our oil price at least inch up a little, $35, $40, to at least reduce the kind of deficit we have, the deficit we have, and the loans that we'll take in will plow back those gaps, and at least we can ride over throughout this year, 2020, and then slide into it.
Only 1 minute remaining. I guess with where the prices are, that, as you said yesterday when we spoke, it was sensible on the government's part to reduce the benchmark to
$20 per barrel.
Yes.
Yeah, $20. Let's do the $20 per barrel, as they say. Cut our according to our money, our pocket, and then let's discipline ourselves for once. And then anything above $20, let's put in the SS crude account. And start building up some buffers, which is what has finished us. We don't have any fiscal buffers. And that has just finished us.
All right, Business Analyst Chika Mbonu, with a very honest approach to the Nigerian economy and what to look out for this year. Thank you so much, sir. Appreciate your time.